But first and foremost, let's just go straight to the economic news for this upcoming week, and then we can review last week's earnings. The biggest thing about what happened last week is that, you know, there was no FOMC meeting or news that would help to deter any stock prices to go up or to go down, whichever it might be. So this week we have on the economic calendar coming up that on Monday, because this is how the market moves, right? Once again, we'll look at last week. We didn't really see much of anything, from July 19th, July 20th, July 21st. We didn't see much of a whole lot, right? We had some jobless claims, existing home sales, things of that nature. But when it comes to this upcoming week, right? This is how we really start to navigate the market, where we see that some of the major economic news like home sales, durable goods on Tuesday, home sales on Monday morning, consumer confidence index. That would be something to really kind of look at to see what the consumers are thinking about buying and selling of goods this upcoming uh, quarter, really, quarter, if not the second half of the year. Um, but on Wednesday, we have that the Fed Chair Jerome Powell will be saying something at 2:30. Before that, there will be an announcement. Usually, this announcement of the FOMC usually takes place um, probably earlier in the morning. So you'll probably get like a precursor to whatever this announcement might be. And then once that precursor is set out, then you'll see that there will be some type of major economic news. So there will be some type of major economic news that would occur, that should occur when the actual FOMC starts to speak. Then at 2:30, then you will see whatever actions to the market, whatever it might be, start to occur. So it might be something like, you know, uh, the tapering of the market, right? That there might be some taper tantrum that might happen with the Dow or the Nasdaq S&P. You might see some type of fluctuation, or that they're because based on interest or inflation. It might not be the interest, but the 10-year rate, right? Or it might be about the inflation, or how inflation might affect the market itself. So Wednesday is going to be a big day. Also, outside of Wednesday, we have on Thursday the initial job claims again. Usually happens on Thursdays, and then gross domestic product. Right, we want to see what the GDP is looking like for America. Right, they want to see that there has been some type of increase. Right, and we already see that there's some estimates that are happening here. That we are, what is it? What they're forecasting. They're forecasting 8.5%. This is a jump of almost like 25% from where it was before. The previous was 6.4. So this will be a good indication of where the market is going. We should get that Thursday morning at 8:30. And then on Friday, usually, this is where we'll talk about inflation, personal income, consumer spending. Some of these might be bouncing off of what was said on Wednesday. So, with that being said, I know that we want to go into what happened last week, right? So now that we've talked about some of the major economic news, we want to see what happened last week. So last week we had a lot of earnings. We had a lot of earnings that was happening first and foremost. So we can go into that. Let's go into what happened on earnings. So if we see this chart right here, hopefully everyone can see the chart. One of the earnings was Johnson and Johnson on Wednesday, I think that was the 15th or the 16th, right around here. The 14th was that Tuesday, I believe. So on the 14th, earnings. I want to say earnings was about to be released because it was a whole week for that earnings to be released. But there was a release of news that said that Johnson and Johnson will pull back based off of some recall on their sunscreen, which was from Noxzema and Neutrogena and Aveeno. And because that pullback happened, this just allows people from the inside to buy. this is a prime example of how insiders or news can manipulate the stock price. So insiders manipulate the stock price. Once they manipulate the stock price, it allows people to get the stock at a cheaper price, obviously. So now that people are buying at the 166 price as opposed to 170 price, it pulled the price back and people were able to buy at the 20 SMA price, right? This is that teal line that I keep on referring to if a stock is above the 5 EMA and does a pullback. So that's exactly what happened. It pulled back, bounced off the 20, and then this was a buying opportunity. So I ended up buying some contracts here. I think it was the 175 calls again, because I truly believed in the 175 calls. And, we can go into some of the option contracts a little bit more in detail when we talk more and more about these stocks that have positive earnings, that, which call, which price do you actually anticipate it going to? A lot of times I will say a price closer to the previous high. The previous high was 173. I saw that the contracts at 175 were cheaper and less volatile. So because of that, it would seem like a reasonable contract to buy. So since the stock price did bounce off the 20, and once it bounced off the 20, it went a little bit higher, going to the previous resistance line. We can see that heading into Monday, Tuesday, Wednesday, all of next week, there's an opportunity for this company to make a new high. And that new high should be around 175. Once it gets into 175, we'll see if it was overbought on the daily chart. And if it is overbought on the daily chart, then that will create an opportunity for us to sell. When we get an opportunity for us to sell the price or sell the stock, that's the best part to be in. So, I just want to make sure that that part is clear. When we're looking at Johnson and Johnson, if you're looking at any stock in the upcoming earnings, that you want to see where the previous high is. You don't want to buy near the high. You want to buy below the high, because there's this thing called buying low and selling high. People like to buy high because they see the stock price going up, but they're not taking the whole history of the chart in its totality. So if you're watching on Instagram and if you want to see what the people on Zoom are seeing, just tap the link in the bio and then you can see what we're referring to when we're looking at these charts. Because the chart is going to tell you where to buy and the earnings tells you what to buy. And what to buy was Johnson & Johnson, basically because, once again, they have dividends. Their dividends is $2.48 a share now, right? Oh, no, I'm sorry, $1.06 a share on the dividends. And they release positive earnings of $2.48. So these are really, really good things that, you can keep up with and just see like, okay, well, these are the things to be mindful of. And because we're mindful of these things, we can allow it to be part of our process of buying and then selling. So Johnson & Johnson was definitely one of those good stocks to get into. Another one, which was on my list of stocks to trade this past month, was PayPal. PayPal, they're coming up with earnings. So let's not go to that one. Let's go to Snap. We'll go to PayPal a little bit later because I'm a big believer in PayPal, always have been. So we can go to Snap. Snap came out with earnings this past week, and they did very, very well, right? This was a stock that, once again, if you follow the Wycoff method, it's easier for you to be able to acknowledge where the stock price is in relation to its history. So when you're able to see the history of the stock, then it makes it easier to say, am I buying near support? And if you're buying near support, where are you buying in reference to where the 5 EMA price is? If you're buying below the 5 EMA price, then you want to see how close that 5 EMA price is to the 200 SMA price. And that's what we see here with Snap. Snap pulled back, right? And let's look at the Wycoff method, right? We see that the Wycoff method said that there was a phase 2, right, coming from May 12th, where it was at support. Support price was $50. Support price $50 on Snap. Snap starts to go up. This is phase 1 at the support price. We go into phase 2 where there's gradual incline and the gradual incline to a hit resistance. That resistance becomes phase 3. Phase 3 hits. And if you need further confirmation, if this is phase 3, We can go all the way back. This is why the history of the chart is so important. We can go back to February 22nd, where that same $70 price mark was hit. Once that $70 price mark was hit again on July 7th and start pulling back, we see that that is now entering phase four. And phase three happened for 1, 2, 3, 4, 5, 6. You had at least 7 days before you can get out of the stock, save your downside risk, allow the stock to pull back, go through phase four. Once it goes through phase four, find support, find support. Then you can start thinking of, hey, do I want to buy this stock? And if I want to buy this stock now, it create a strong green day. And that's all you want. That's all you needed. Unfortunately, I didn't get back into this position. I got into Johnson Johnson, PayPal, and Peloton. So I held those positions. But Snap was one that I knew if they came out with good earnings that they were going to go up higher. Right. And that was the next thing. They came out with earnings because they tend to do well during earnings. And then this whole social media thing, everything around social media. You see social media with Twitter, right? Twitter did well. You see Facebook, we see Snap. Snap obviously did well where it made this jump afterwards. So it based here. And then this is technically phase one. And then it went to phase two and it's continuing this phase two. And this phase two uh, was was accentuated, was even initiated by earnings. So the power of earnings will tell you what to buy. This is something to buy, right? It should pull back because it is overbought, but even though it's overbought, when it does pull back, we want to see that it holds not only the $70 area, right? Because the $70 area was resistance, now becoming support, but we want to see that it keeps this gap, right? So this $70 to about $73, we want to see that that gap is held. Once that gap is held, we see that it's at 77, it closed at $77, closer to $78. But once we see that gap being held, then we can have an opportunity to watch the stock go higher, which I anticipating it going higher and higher as social media platforms continue to find more positivity on the upside, right? So this is Snap. And I know we didn't go into the intricate details of the 4 hour chart, the 1 hour chart, and the 2 minute chart. But are there any questions that like anyone has when it comes to this stock price itself? Does anyone have any questions about this one, or do you have a question about a stock that you traded before and weren't sure about its direction?
Afternoon, everybody. And Jermaine, thank you for always holding these weekly educational sessions.
Yes.
Question about what you said, relation of 5 SMA to 200 SMA. I didn't catch that.
All right. So we can use that here with Snap, right? We'll use this with Snap, and then we'll go into another example. So, all right. So what happens is that a stock will go up, right? And as you can tell, this green line is the 5 EMA price. And anytime when a stock price, meaning these candlesticks are above the 5 EMA price, it will have the opportunity of going higher. And usually it will do that, right? But sometimes when the stock price meets resistance, like it did here at the $62 area, and then what it did here around the $70 area, the stock price tends to go lower, right? And then once it goes lower, it will go below the 5 EMA price. Once the stock price goes below the 5 EMA price, it tends to check the 20 SMA price. Once it checks the 20 SMA price, you will notice that the 5 EMA will start trending down towards the 200 SMA price, right? So now when you're looking at the relationship between the 5 EMA price and the 200 SMA price, we're looking at it from a space of, well, how did it first create support? Are we creating a support line first and foremost? And you have to wait for that first green day to settle. And that's what happened on July 19th. We had that first green day to settle to create some type of support. Now, the relationship that you mentioned, that I mentioned that you're asking a question about, is that the 5 EMA price and the 20 SMA price kind of came close to each other. And it did that a couple of times. It did that back here in May. It tried back here in March. But you see that that support price was held, right? So this is where I say, drawing where the support price is will help identify where you are on the eventual downside to closer to the 200 SMA price. So if you look at the daily chart and you see that the 5 EMA price and the stock price are getting close to the 200 SMA price, but you start to see that a strong green day was held for the stock price, then that becomes easier to see if there will be a bounce for the upside. Right. And we tend to get these bounces on the upside. Like, let's look at, it was Johnson Johnson that we just talked about. We can kind of tap into that one where we also see that the stock price was trading below the 5 EMA. And as the stock price continued to trade below the 5 EMA, just double checking to make sure it's sharing on the screen. Yes, it is. And that the stock price is trading below the 5 EMA price. It was still holding support. And it was holding support around this 162, 160-ish area, right? So it didn't come all the way down to the 200 SMA price, but you want to see where that possible downside risk is before you start buying. And then once you start seeing a strong green candlestick, like maybe right around here or what have you, and you see that it's starting to trade above the 5 EMA price again because the moving average is crossed, then you can say, oh, okay, this stock has upside again. And that's what happened with Johnson & Johnson. That's what happened to Snapchat, where it started to come down, but it also was holding the 5 EM. It was holding above the 200 SMA price. Does that make sense?
Yes, absolutely. Thank you.
Good, good, good. So always, always want to find clarity with these stock prices, just because the moving averages, yes, they might be lagging indicators, but they give you an idea of where the price could possibly go to. But at the end of the day, you have to expand on out to the full chart so that you can see what's going on, because it's easier to understand or to acknowledge where where the full in its entirety, where the stock price is if you look at the historical chart first, and then narrow in to identify where you want to buy in as a price, and then narrow and then expand back out. Because once you're able to expand and come back in, then you can get a better idea of where you are in relation to where the stock price is trading. Because these bigger float size stocks, they have a bigger spread between the bid and the ask. We'll see that with a couple more stocks. Let's go to Peloton. Peloton, yes, even though it came down and it went through phase four, it found phase one. And as it traded above the 5 EMA, yeah, it might have found resistance here at the 200. And I know these red lines that I've been drawing as my support and resistance lines are there. But you can also see that after it not only found resistance as it was, because it's trading below the 200 SMA price right now. Let's go there. As it's trading below the 200 SMA price and the moving averages start to coalesce, you'll see, well, now it's starting to coalesce. You'll see from before, it found resistance here. This was phase three, came down phase four. Phase four is trading below the 5 EMA price, strong green candlestick. Prime example. You have a strong green candlestick here. It has an opportunity where, once again, it met resistance, pulled back, but we still see that there's another 5 EMA price here. And it's trading right here at this 5 EMA price, where it has an opportunity to go back and retest its previous resistance at 125. Any questions about that? Any questions? I keep on saying that because I don't want to be, just going in, but I can. So let's go to another stock that will be coming up for earnings. And like I said, typically what I'll do is I'll put up this PowerPoint once again so you can just kind of see. And let's go to what will be coming up for earnings. So hopefully you can see this. Well, I think you can see it. You should be able to see it. No problem. But the biggest thing here is I'm very focused on Wednesday, just because of what the FOMC is going to say on Wednesday, especially before Jerome Powell mentions what he wants to mention. Because if you can tell, there's a lot of like prominent companies in here that really can dominate the market, like Qualcomm, semiconductors, Tilray being, the weed industry, Pfizer, of course, pharmaceutical industry, PayPal, which is my favorite. Here, I am still in it. I've been kind of in and out since Wednesday, so I still have a position in there. Ford, looking at electric vehicles and stuff like that. So this consumer confidence will definitely tap in right around a lot of this. ServiceNow, Yum China, Yum Brands, essentially with not just Pizza Hut, but Taco Bell, a couple of conglomerate, well-named food chain establishments here. Thermo Fisher does a whole lot when it comes to biotechnology and manufacturing. So, we have a couple of actual sectors that being affected. And how can I leave out McDonald's, right? McDonald's is not better than Chipotle at all. But also we started looking at Tuesday. There's a couple of things like, Apple, and whatever Apple releases, I would imagine it's going to bleed into Wednesday, looking at Qualcomm, because I remember, Apple needs semiconductors. They haven't been making them on site yet, but that's the next phase of what they want to do. So Qualcomm definitely connected to Apple. UPS, I'm pretty sure if you've had anything delivered or shipped, UPS might actually do something really good. So consumer confidence would be affected by, the packaging and traveling of the goods that you might have. GE, yeah, I know that they're kind of like breaking up their services as far as what they do on the inside, but they're still a well-known company that has a lot of backing behind it. And then JetBlue, of course, people are looking to travel, and people are still looking to travel with all these with this Delta variant starting to pop up. And this will probably be something in mind that we'll try to keep in play, particularly even with Spirit Airlines that's released on Wednesday. So we might never know how airline would affect, the market, the airline market. So JetBlue might be one of those companies that will continue to affect the market as far as air travel is concerned. So, Tuesday going into really Wednesday. Wednesday is the big day for me. Thursday, I know MasterCard. Well, I didn't mention Visa on Tuesday, but on Thursday, MasterCard. So depending on how electric payments might go, or even, cryptocurrency, because even though cryptocurrency might be down, like the Bitcoin and stuff like that, there are still companies like PayPal that are investing in it. And so Visa and MasterCard, they're starting to become more bigger investors in cryptocurrency. Also, there's Amazon. Amazon's, we know, powerhouse. So whatever they do is going to be good. And Yum Brands, right? I can go into this all day, but Yum Brands, if you're not familiar with the conglomerate that Yum Brands is, because you see that there's Yum China, right? When it deals with food, that would be something really good to look into. But I can keep on going back and forth. I wish this will be the last one that I'll mention about earnings, hopefully, other than Tesla, but it's Starbucks. I've been saying since Starbucks crossed $100 that you should buy Starbucks. Put that. Buy Starbucks. and we'll probably even go into it a little bit more after Starbucks, but even you can even look at Shake Shack. Shake Shack has been another food industry company. People need to eat, and these powerhouse conglomerates that have been able to survive the pandemic continue to survive by employing their human capital into their employees. So that's why they've been able to survive, because one, they have the backing to do it, but they keep on reinvesting into their employees, so that keeps employees interested on staying. So when it comes to food, those are like, outside of Chipotle, you know, uh, Starbucks definitely, and I'm seeing Shake Shack. There are always a line at Shake Shack. Uh, so let's start going in, right? Let's go into some of these earnings, right? And we'll start with PayPal, and then I know Leon, you probably want to go into Tesla a little bit, correct?
Yeah, because yes, thank you. Even though Tesla is very, very volatile and it's really scary at times, because it just moves. It moves 10, 15, $20 and up. Not even during the day, during even minutes sometimes. But so that's what makes it so appealing, also. But I think they might be bottoming out, right? Did we have a talk about this earlier? Is that why you're bringing up Tesla? Forgive me, I'm
No.
right? I think it might be bottoming out, or is it back up? It's starting to climb again.
Yeah, it's my theory about the run up before earnings.
Yes, I know.
And that's been happening. I'm pretty sure you've been seeing it thus far. I need to write a book about it. I really do. I definitely need to sit down and write a book anytime.
We could definitely self-publish nowadays,
Yes, we can.
right? It's much easier.
I
But
think
Tesla, it's just it's hard. It's almost hit or miss because it's just I feel it's more volatile than SPY sometimes. It runs.
and agreed. Now we're going to definitely elaborate a little bit more, a whole lot more, not a little bit, whole lot more on that. So let's investigate PayPal, and then we're going to go straight into Tesla. Um, No, actually, let's do the reverse, because Tesla comes out with earnings first. So let's do with Tesla. Tesla comes out with earnings on Monday, and I think we saw Monday morning, afternoon when the market closed. So when we have Tesla here, we see Tesla. We see Tesla here. Let me just expand the chart a little bit. We see Tesla. It has bottomed, right, and we can identify the phases now. Before we couldn't identify the phases, but now we know that Wycoff has, something that is old and true, right? We're not reinventing the wheel here. The things that I'm sharing are things that obviously, traders, investors from decades, even with a whole century, have been using um, to be successful. So if we continue to look at how the Wyckoff method looks, we see that this is phase one, right? And then phase one went to phase two. This is we're talking about in like was this the beginning of 2000? 2020. So we see that it's just trading phase one, phase one, phase one, phase one, phase one, continues phase one, right? And then it started to make some phase two here. It leveled off phase three. It happened real quick, right? It was maybe real quick. Happened within a matter of like 5 to 6 days. And as it continued, yeah, it dropped down a little bit before it actually bounced. Now, with this bounce, we see one. This goes back to the question that Leon was asking, right? It's trading below the 5 EMA. Does it? Where is the relationship between that and the 200 SMA price? And that relationship comes back to where that support price is. So we see that, yeah, it came here, bounced off of that price, but it also, where was previous support? It was back here, July 24th of 2020, and then also back in July 9th, 8th, and 7th of 2020. We see that this support line was kind of held, right? So since that support of $277 was held, it bounced and then went up higher. So now we see that it's trading above the 5 EMA price. So as we identify parts of phase one going into phase two, looking like phase three, and then as it pulled back, phase four, it held support, phase one, phase two, phase four, right? And then it bounced, and then this is all phase one again, right? So anytime when you see this consolidation, start to think, is it phase one or phase three, right? If you ask yourself phase one or phase three, then you know that after phase one, there's going to be uptrend, right? It did an uptrend and then start to consolidate. If it uptrended and then started consolidating, then we know it's phase three. Phase three made a new high at $900. And then we know after phase three, that has to be phase four, especially if it was overbought. And it was overbought prior to making the new high. It made a new high and then started to come down. It came down all the way, phase four held support, right? This is support at 562, right? I drew on that line so that we know that 562 or 560-ish, yeah, 562, let's just say 570, because I remember closer that 580 was more of the support price, and this was before it made this uptrend. And I kept on saying, as long as it's above 580, it's going to go up higher, and that's what happened. And it went up like $320. Um, so it held this support here. Let me just so we get an idea of these technicals again too, because the technicals or the candlesticks, I should say, not the technicals, but the candlesticks, they always give you a personality test, right? To tell you the personality of the stock. So if you see this wick right here, understand that when a stock is coming on the downside and you see a red candlestick with a wick, we want this candlestick to be filled. That's what the stock is saying, that we want this wick to be filled with more sellers. And that's what happened here. We want it to be filled with more sellers. And the sellers came, we got a blunted candlestick, and then we saw the bounce, right? When you get this blunted candlestick, especially when it's deep like that, oftentimes you'll get a reversal candlestick, and it'll be something like this, a hammerhead. Now, I'm not saying that after you get the blunted candlestick and you get this hammer candlestick, that it's going to go up from there. No, there's other factors that play, right? And we see that the MACD, the momentum, still was showing downside, even though it wasn't going up after this characteristic green candlestick started to show. But do know if this green candlestick was above the 5 EMA price, then it'll be telling us a different story. But because people were looking at this blunted candlestick and saw that, hey, this stock can come down and maybe found a bounce, which it did, found the bounce. They thought, they were hopeful that it would go up higher, but whatever news that might have came out, it brought it back down. So I just wanted to highlight that real quick, right? That we get these types of movements in the candlesticks. They're telling us something, and because they're telling us something, we should really pay attention. The wick wants to be filled, and it was filled, and it went up after it was filled. So we just want to wait to see what type of day this candlestick would be. Don't want to buy on the red, you buy on the green. We tend to sell on the red, right? Because we don't want to hold the downside, only unless you want to increase your position, which is something else. So once again, we're back on Tesla. We see phase one here, phase two, phase three, phase four, right? After phase four, we see that there was a bounce. It kind of went up and then came right back down, right? So it's holding this support level at this 570-ish level. After it bounces here, it goes back up, right? So this is once again, phase two, found resistance. How did it find resistance? It might have been some news that was released here in April, not 100% sure or clear, but we do know that there was some resistance right around here, right around that 778 area, right? So here, and then over here. So we see that there's resistance there. So we see that the resistance was there. Also, same kind of news or same type of idea happens on these blunted candlesticks when they're green. Sometimes they're met with a strong full red day on the very next day, right? You're like, oh, this is green. It's above the 5 EMA. It should go up. Sometimes that's not the case. We can go on the intraday time frame and then see that on the intraday, the the price was probably overbought and need to pull back, right? On the 4 hour, on the hour candlestick. Um, and then we could even go back on that day. But let's continue analyzing the chart. It's full in its full essence. We see that here it hit resistance, wanted to go sideways, right? And then once again, it was two. This is phase two, hit resistance, phase three, phase four, downtrend. Phase one started to trade sideways, right? After the downtrend, trading sideways. Phase two kind of comes up. Phase three trades sideways, comes down after on phase four, and now kind of trading sideways, phase one. So let's say that, on Monday, once again, I would not buy this before earnings is released. But if I never buy a stock before earnings is released, I always wait afterwards. When I got back into Johnson Johnson, I got back in, took some I took some profits before earnings was released, allow earnings to release to see where the stock price would go, just in case, whatever news, even though they reported good earnings, I just still want to see what news that might come out afterwards, right? There might be something that could have happened because someone took the vaccine and they said that they got a blood clot in their lungs that would have affected the price. None of those pertinent informations was released. So since it wasn't released that way, I got back in, and I was just waiting for the stock price to continue to rise. So same thing with Tesla, right? But we see on Tesla that the stock is trading below the 5 EMA price, but bouncing off the 200 SMA price like it has done before. Now, what we said with characteristics of the candlesticks is that we see this wick here, right? We see the wick on the red candlestick. So this wick is telling us that it might come to 637, maybe to hold support 630, right? If it comes to 630, $630 a share, it will be holding supportive prices from the past. Supportive prices from the past was back here, back on June 22nd at that 630 level, and then back here on June 1st, May 28th, May 27th at around the same price, 630. So I would say the ultimate downside support will be about 630, right? And that ultimate support price says based on where it is right now, and in relation to the 200 SMA price, right? And we're about to analyze a little bit of the 200 SMA price, right? So we see that, keep on going in. I gotta go one more. I'm still trying to identify the high, right? The previous high. So we see that right now is holding the support price around 630, right? And we see that there could be an ultimate low at about 570, right? So why, or 570, 580. So why am I even identifying that? I'm identifying that price mainly because, one, the stock is trading right below the 5 EMA price. Two, if we say that the stock closes below 530, for some odd reason, some news about SpaceX comes out on Monday morning because, Blue Origin and Virgin Galactic, they went into space, but Tesla hasn't been into space yet. So there might be something that might have been said in the morning, Monday morning, that will drag the stock price down so insiders can buy at a lower price. That tends to happen. That happened with Johnson Johnson. But if it does that and it continues to trade below the 200 SMA price, do know that if both moving averages start trading below the 200 SMA price, and then the stock itself or the company itself releases not so great earnings because of whatever mobilization that they might be having in China, just know that the price could come all the way down to 570. That is your ultimate low price. So this is why, even though we might want to get in at this 630 because that's $600.30, $630 seems like a reasonable price to get in on, we still have to think that there's still $50 of downside. So this is the volatility that you're mentioning, Leon, where you'll have a stock like this that will tank pre-market, that will tank after hours during the time when the market is closed. But once the market opens, it could be at a reasonable price that will allow you to get in maybe around this 570 level, and then allow it to go back up. We also see with the TTM squeeze that there are some red histograms that look like they want to get a little bit larger. Because of that, that also plays on the downside risk, right, of 630, maybe 570, 580, depending on what is said when the after hours earnings report is released. So, so I would say downside risk, we'll have this 530 price. Um, if not that, then let's check out upside reward. So upside reward, we want to say is right around here at 700. And once again, we're going to zoom in, but I want to make a line that shows us this resistance price. So as we zoom in, we start to see resistance. We're seeing resistance being held here. We see this resistance being held right around this 698, 700 level. And we start seeing it in other places too in the past. Back here, back in April, right? We see this line here. We also see this line here back in February, where the stock is kind of testing the price, and it will either break down, which it did, bounce, and then come back up, or it will break out like it did over here back in December, where it broke out to newer highs. So I would first say that the upside reward would be around $700, 698, that range, right? And you definitely need a range, a buffer here with Tesla because of that volatility that you did mention, Leon, where you see that it can go up and go down very rapidly. If we put this into smaller time frames, we look at the 4-hour time frame, right? We still identify the Wycoff method, and we still identify where it is in relation to the 200 SMA price. It's trading above the 200 SMA price, which is a good thing, because if it's trading up, the price goes up. If it's trading below it, the price goes down. So right now it's trading above it, right around here. So we're anticipating bullish sentiment above this SMA price. What was the price? I think it was at 640, right? So we see that, we're like, okay, and it's in, Wycoff phase 1, right? It went up, sideways, came down, went up, came down, trading sideways, phase 1. Now we go to the 1-hour time frame. We see on the 1-hour time frame, it's below the 200 SMA price. So this leaves some level of skepticism on upside price, what it can actually do when the market opens. The upside price is at $654.72. So we see that that is that is resistance really when it comes to prices intraday. Do we think that it can break it? Of course, we all think that Tesla can go higher, right? Especially since Elon Musk said that they would be accepting a cryptocurrency for the purchases of those cars, right? They had a meeting last week, Friday, or no, this past week. When I say they, it was crypto investors, including Kathy Wood, Jack Dorsey from Square and Twitter. He's the CEO of those companies. And a couple of other like big names that look to invest in the crypto space. So they're looking at this. They're saying, okay, we'll allow cryptocurrency to be a part of it. If crypto continues to go lower this weekend, going into Monday, then I would think that it would influence Tesla as well. So the $654 range or price, I should say, would push the stock price down. So the stock price would find resistance and then probably bounce again on this 620, 630-ish price, right? That's really put it at 625 425. I really put the price at 625, not really 630 as I thought. Because I'm eyeballing the price, and yeah, there might be little spikes here and there above that resistance, but remember with those are little spikes, little fake outs kind of thing, and this is not an exact science. That's why I keep on saying ish, like 630 ish, because it probably won't go exactly to that price, but it will go near it, quite a couple of times. That is very common, right? You won't be that exact price, but near that price. Might be off by $1 or a couple of cents, what have you, but it's not an exact science. We want to use estimates and approximations in hopes that we're close to that price. So maybe this 623.25 area is probably even more accurate than 630, right? But at the end of the day, it's still trading below the 200 SMA price. Once that happens and it's trading below there, expect there might be some resistance before the stock price actually goes up higher, right? So we have some resistance there. And then we go into the smaller, intraday time frame, 2 minutes. That means each candlestick represents 2 minutes, right? It made a previous intraday high at 664. And then once it did that, like I said, I cannot lie about this. No one can lie about this. Anytime a stock price intraday makes a new high, it will start to trade below the 200 SMA price. It doesn't mean that the stock price is not going to go higher overall. It just means that intraday it has to pull back, and that's what it did. Once it made this high, and we can just see what it did before it made the high, right? Before it made the high, it was trading below the 200 SMA price, made a new low at the 620-ish area, and then once it started doing that, it just bounced and went up higher, 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 and yeah, it went to below the 200 SMA price after the stock market opened. That could have been based on any type of news that Tuesday morning, last week Tuesday morning, and then it started to make a new high again on that Wednesday morning, right around 10, right? And then after that, it started to trade below. So now that it made a new intraday high, and we're looking at it on the present time frame, we're looking at it and say, okay, you made a new high on Wednesday. On Thursday, you tried, getting, to a newer high, but you couldn't. So if let's say that you bought here, you bought low, and you're like, okay, now that it's finally below the 200 SMA price, and I see that it can't create a new intraday high on Wednesday, maybe it will on another day. I would never try to catch the bottom, but if you try timing the bottom and you saw that some type of support was held, then you saw that, okay, it went up and then pulled back. On this next spike, this is where you would sell, right? Because sometimes we look for a dip and rip, and this was a dip, and then it ripped from 650 to 662. That's the $12 of upside. This is more of that volatility that Leon was mentioning. Dip, rip, dipped again, ripped again, right? So we have this dip and rip scenario that happens with the stock. Typically it happens where you have the, spike, and then it rips down, spikes, then it rips down, probably around 10 a.m. That's what happened here. 10 a.m. Around 10 a.m. So these are the little intricate fine details that you can take from the stock that, hey, what does it do around 10 a.m.? Does it go lower? And it tends to go low, at least recently, it tended to go lower around 10 a.m. after the stock market happened. And then after that, like around after lunch, maybe around 12:30, right? 12, it started to rip again, right? We see that a couple of 1, 2, 3 days. That's exactly what it did, right? So going into Monday, maybe Monday morning, it will try to test that 648 area. We see that intraday, right? We see a 648 is being tested, is right here on Friday. This happened at 2:42 or so on Friday. So when we were looking at the 1 hour time frame, we see that the 1 hour time frame is showing that same resistance at 654. 654 happens. Does the price go above that? We don't know. But if it does go above that, we should know that 648 is that intraday resistance. So if we think that this stock price is going to pass the 200 SMA price on the hour chart, right? It has to contend with 648 first before going there. Maybe even 645 before going there, because there's a lot of consolidation that happened there at 645, 645. Then maybe it goes to 648. Then maybe it goes to that 652 or 654 area, right? 654, yeah. So those are the levels of resistance on the upside that you will have to contend with before the stock actually goes up. We identified the downside, finding that support, maybe at 620, 630, somewhere in that $10 range. Sounds pretty equitable to be in, because there will be a lot of demand there, but there will be also a lot of demand down here for buying. So we're seeing the bounces there. Let's say that it doesn't hold and it starts to bounce here at the 620-ish area. At least you know that you're protected on the downside risk, so that you can receive more upside reward. And the upside reward we hope and anticipate will be near $700 with positive earnings potential, that we start to trend towards that $900 area. The $900 area has a whole lot of upside from 643 to 900, but it won't happen all in one day. So that is what I gathered from Tesla. Do you have any questions about Tesla and the potential of what it can do beyond what I just shared? Anyone? Questions? Now, don't be shy. I know, Grace, you tend to have questions, but you hold it in sometimes. So don't be shy. You can definitely share. All right. So once again, I feel like Tesla has upside, but definitely want to bear on the downside risk around that 620, 630 the area. If it starts leveling off there around 620, 630, definitely start looking to either purchase on the downside when it pulls back, and anticipate some upside. But once again, this stock probably would not rip up higher until once the earnings is released in the after hours, because that's what we're looking at. What is it going to do when the after hours happens on Monday? So if you're able to buy a couple of shares first and then see the upside, then you're probably better off than trying to buy an options contract. But just know that that volatility will be there pre-market and while the stock market is trading during the day. If there's no questions on Tesla, hopefully I answer them all, as far as like where to buy, where the risk is, and then where the reward is. We can apply the same method to PayPal. PayPal, like I said, I've been in it. I was able to catch some nice rewards on Friday. I did sell it $1 probably too soon, which I tend to do. And I'll share why I end up selling it too soon. But as you can tell, once again, well, first and foremost, we'll start off by identifying the Wycoff phases. Once you're able to identify Wycoff phases on the stock price, then it gives you a chance to buy a stock when it's at its low versus buying it as high and anticipating it to go higher. So once again, if we didn't know about, everything that happened in 2020 and why the stock prices went low, this was a perfect stock to buy when it was at $100. Let's look at Square, just to do it in comparison, because this is going to be also another stock that will go up higher. Same type of scenario, right? Last year in April, it plummeted, obviously, like all stocks did, but it was trading at $68. Look at this run up to $283. So I was like, you know what? I actually use PayPal. You know, I'm very strong on buying the things that you use. You know, after this, we're going to do Starbucks. I've been saying since Wednesday to buy Starbucks. I've been saying since Wednesday, maybe even Tuesday, to buy PayPal. So now we're here again. PayPal leading into earnings. It made its new high already. You know, this is where the run up before earnings, you see that a stock will make a new higher highs, right? If we go back in the time and we see once earnings was released, this was back in February. Earnings was released, it ran up higher. Even though it did pull back before earnings, it ran up higher. And when it ran up higher, it pulled back, right? It was overbought, pulled back. Um, it went through its phases, went through earnings. Something happened with earnings, pulled it down, right? We take these things in consideration. It pulled down, not too much. It just pulled back to previous support. Where was this previous support? Right around this $230-ish area, right? So we see that $230 is practically support. So we're just going to draw a line there just so that we know that we have a supportive price right around 230. Let's say about right here, right? And I'm saying right around here because we're compensating for a little bit of this dip that happened here and a little bit of this dip that happened here back in June 26th and on March 4th and 5th, right? So once again, let's even look at March 4th and 5th, right? We see this is March 4th. We see this wick is here, right? This wick being here. And then the very next day, we see a longer wick, right? So we see on the selling side that there wasn't a full candlestick that encompassed all of this wick of selling. And that's what happened here on the 8th. That was Monday, because it had been the 5th, then Monday, it's 3 days later, right? So this Friday, then Monday. So on that Monday, it encompassed the whole wick. And then the next day, Tuesday, gave us some upside. So I just wanted to point that part out because you will see this, right? And if for some odd reason it goes green instead of giving you a full candlestick, then that means that there must be some type of positive news happening underneath that it's not sharing with you on the surface. So just keep those in mind. Look for the wicks. The wicks give you an identity of where the stock price can go. So that's how we were able to identify the supportive price. So once again, phase one, maybe a little bit of phase two, phase four happened. Then there was the phase one right here. And then phase two, phase two, phase two, phase two, phase two, hella phase two, found resistance. Phase four came down a bit. Phase one, phase two, phase three, phase four. Sometimes you have to do this all the way through so that you can really clearly see the phases. Was there an uptrend? Yes, there was an uptrend. Did it hit resistance? Yeah, it came to previous resistance, then pulled back, phase four, right? Then we see it again. It kind of went up gradually, right? Phase two hit resistance right around here. That's phase three, came back down, phase four, right? Went up, came down, went up. So here we are. We see phase two, came down phase four, phase one, phase two, kind of phase three, even though it had this micro downside, but it's still overall phase three, phase four, phase one, phase two, phase two, phase two, run up before earnings makes a new high. Now, breakout charts. So this is a potential breakout. And why we say breakout, because the previous resistance, which is what the previous high was, here before it created the new high on Friday, which was here at 309, right? So 309 was created here. Well, I think it was like 309.10 or something like that here. And then 309.48 here, right? So we know that this overhead is a lot. And we see that it is a blunted candlestick too. It's kind of blunted, not all the way, right, on the day. So before earnings is released, maybe this stock will break out a little bit higher. And because the stock is trading above the 5 EMA, it could possibly do that. But it also could find a red candlestick here. And that red candlestick meaning that it could happen where the stock breaks out pre-market and then pulls back to the 5 EMA, giving us a red candlestick until earnings is released on Wednesday after hours. And yeah, it could go red, green, after the breakout. But what we're looking for is a place where one, does it report positive earnings? The past times that it reported earnings, the past three earnings reports has shown positive reporting each report. It went up 1 cent back in November, from November to February, and then from February to May, it went up 12 cents or 14 cents. So we should expect or anticipate another like increase as digital currency, digital payments, digital buying increases. So because of all these factors that happen, we're anticipating more upside, right? Or at least I'm anticipating more upside until earnings is actually released on Monday. So once we go into the smaller time frames, we start to see that one is hitting resistance, right? It's kind of overbought on the RSI. Each candlestick represents 4 hours. So it hit resistance. It's trading above the 5 EMA. It's above the 200 SMA price. The MACD, the mouth is opening here and it's trading above the zero line. The 4 hour, the RSI is slightly overbought, but the histograms on the TTM Squeeze is starting to show a dark blue histogram, which means that there might be some leveling off here. That's one, right? This is one indicator that suggests that there might be still some selling off. Even though it might go high, has the potential of still coming down. The hour chart shows that the RSI is overbought. The histograms on the TTM Squeeze are leveling off and becoming darker in color, right? And we see that this resistance is being held, definitely. But we also see that there's a cross on the MACD, which suggests that it could still trade sideways, right? So it would be entering into a phase three. If it enters into a phase three here, right? If it enters into a phase three, then we know that this phase three will start turning into phase four. And that phase four will start testing the 20 SMA price and then possibly even try to test the 200 SMA price. So that's on that's the 1 hour time frame. Then the 2 minute time frame suggests that there was a new high that was created, right? And it tried breaking that new high. It made the new high here around 11:50. I remember I was already out over here. I got out right here because a new high was created. Even though it wasn't overbought, I said I'm going to get out because I need to be disciplined, and discipline shows that that there's a steady increase in your rewards. Right, you will continually increase your profitability if you just stay disciplined. So what? It went another $1.50, almost $2. So what? It did that. Doesn't matter because now that it made the high, it's gonna have to come back down. And once it comes back down, then it gives it a chance to trade below the 200 SMA price. It trades below the 200 SMA price, which is $308.21. Once it starts trading below that and finding support like around this 306 area, 306-ish, then maybe it holds that support through earnings and then gives us a chance to find higher upside after earnings is released, because we're expecting PayPal, Square to give better profitability than the banks. If you're in the banks, if you're in Wells Fargo, Bank of America, JP Morgan, which is probably the only bank I would suggest to even hold a position in. If you're in any of those banks, Schwab, You know, if you're holding any of those positions, I think that probably your best bet is to look at the market cap of the traditional banks and start looking at the market cap of PayPal and Square, because they outweigh those of the traditional banks, which also gives us the meaning that people are more interested in digital currency, digital payments, than they are with their own traditional lender, right? So with that being said, once again, you start looking at PayPal for, you know, what the consumer is saying. The consumer is saying that they believe in digital payments through non-traditional banks before they will trust the traditional banks. So I would say if you were looking at PayPal, you were looking to buy, you will wait for it to trade below the 200 SMA price because they already made a new high. So what if the market opens and it makes a new high, like it spikes? I want that the market opens, this does a dip and then rips up higher, right? Before Wednesday. If it can do that, I will get in. This is my game plan. I'll always have a game plan. I have a mentor, and my mentor will always say, you investigate before you invest. And if you investigate before you invest, you cannot go wrong, right? Because you already have your game plan. So the game plan would be that I would purchase some option contracts around this 305 price, $305 price, because that's the previous support. Supported price was held here, right? This was previous resistance, now new support, right? Well, this is more 304. So I'll say 304, $304.27, somewhere around there. It holds that price. If it holds that price, I want to be in. And then maybe I catch some more upside. So when we come back out to the 1 hour time frame, and we say, okay, well, there's that 304 price. How does it match up with? It looks like on the hour chart. And on the hour chart, it shows that, okay, well, previously, 304 was here, right? This was like becoming resistance, and then the resistance was broken and went up higher, right? But it is overbought. So does it break higher? If it does break higher and it's overbought, then there's nothing I can do. I don't want to buy when the stock is overbought. If the stock is overbought, this is when you should be thinking about selling, not buying high and then trying to sell higher, right? You're like, oh, I can sell it at 350 now. No, the market conditions will probably tell you otherwise, right? We don't know what the Fed chair is going to say on Wednesday, right? So that's something else that you want to take in consideration. It hits this resistance, it can pull back, right? It can pull back to this 200 SMA price. So there goes my downside risk. I say, okay, I want to get in at 304. My downside risk is about 298. So that's $6 of downside. I'm already near kind of resistance. Maybe I get another $5 up. So that's still a 1-to-1 ratio. I like my 2-to-1, 3, 4-to-1, versus a 1-to-1 ratio. So I definitely want to see some pullback before I get in. If it does go up higher, then I can just say that I missed it, and then I'll just wait for it to pull back when the inevitable retracement happens, because there will always be a retracement. That's the one thing. You never chase these stocks. If it does what you expect it to do exactly according to your plan. Do not chase. If it comes back, you buy low, wait for it to come back up. Downside risk, always take that into accord. So that's PayPal for me. Like I said, if I were to buy a contract, I was buying the 345 contracts. So I was buying the 345 contract. So let's send that so you can see what that looks like. So the contract price obviously is different from the stock price. So the stock price, you will see that it says 205. I was buying this before it got into the twos. We get the low ones. I was buying it down here. I got 101, 102. It's not showing up. I was hoping that the arrows would show up, and it's not showing up. This is the one thing I have to figure out. How do I get, even though it's showing all accounts, it's not showing me where I bought in at. but it's okay. I bought it while it was low, and then I sold it while it was high. So I sold it at 215. I think it was 215 or 212. So I was able just to take a nice little chunk, just sell as the meat of the move happens. And that's what you want. Now, on this contract specifically, it shows that there's still some more upside. Maybe if I go to the smaller time frames, nope, it still didn't show. So on the smaller time frames, it still shows that there's upside on this contract. This is this is 304. No wonder. Okay, that's why. Let me hold on. Let me change that. It was 304. I thought I highlighted 303. Oh, okay, here it is. 345. So okay, let's that was the problem. So we see 305, 345. Nope, it still didn't show. Okay, that's okay. And so it still didn't show my price points, but that's whatever. But we still see that this purple line is a theoretical price for the contract. So this is what people are thinking that the price could go to. Um, Let me just double check my notes because I don't have my notes up, and I don't want to be telling y'all the wrong things that I did on this stock. Let me look. Does anyone have any questions on anything that I've said thus far? Because I know this is a lot, um, and it can be overwhelming. Okay, so on, oh, that's Johnson and Johnson. PayPal, PayPal. PayPal. Ah, my notes did not save. Oh no. And so I know I bought some of this contract at $1.23, but the notes that I wrote while I was on the train apparently didn't save. So if I bought it at 123, that had it been on this day. Oh, you can see it. It was on the 21st. The 21st, I bought it at 123. I know I bought some a little bit lower than that, a whole lot lower than that. I probably bought on my Robinhood account. That's probably what it was too. I bought some more on my Robinhood account. But either way, you're able to still catch this upside. Don't Let's not lose the matter of the fact. The matter of the fact is that there was exceptional upside that was happening. The theoretical price at 216. This is what people expect the price to go to, or at least that's what they think. That they think that the stock is worth this price. So if they think it's worth this price, and you're buying way below the price, there's still some room here based on this contract. We go a little bit deeper into understanding the contract itself. We'll say that, you know, all right, so the reason why I even considered this contract is that one, it had a low volatility, right? 33, 34. And if you go deeper and deeper into, because this is out of the money, all of this is out of the money. So when you have a contract out of the money, you want to look for low volatility, right? And of course, a price that's reasonable, right? So yeah, I could have bought like this $4.75 contract, but I wanted a little bit more reasonable where I can buy 2 or 3 contracts easy, pay the same amount of price here, but still get the same amount of upside, right? So we see that the volatility is about 34% now. Um, so that was relatively low in comparison to those that were in the money. The volatility of the contracts that were in the money was at 34, 35, 36. So I was like, yes, I want the volatility to be low. Even if you go deeper out of the money, you start seeing that it's at 45, 42, 45, and then goes to the 50. So that's a lot higher than what I want. I want low as possible. The lower the volatility, the cheaper the price is. Lower the volatility, cheaper the price. It's a lot easier to deal with when you have a cheaper price, and You're just like, oh, okay, this is no problem. Yes, I did buy it on my Robinhood account. That's why. It says it in my notes. You bought it on your Robinhood account. I should have read. Reading is fundamental. Um, so that's why you can't see my entry price. But I still was able to get in and out, and still able to find a lot of reward there. And that's the most important part. Um, so when you're looking at the volatility for the contracts, you want it low. When you're looking at the volume, you want the volume, you see at 345, the volume outweighs the open interest, 51. That was another clear indication of why I should get this contract particularly, right? Now, there were other contracts that probably had something similar, right? We see this 319 to 214 as far as volume to open interest. But, close to the $5. We didn't want to pay that much for a contract. Um, Also, we had this 48 to 44. Yeah, 48 more than 44, but when I looked at it, I say, oh, this is 336. That's at least 6 times more than 51, like open interest. And still, if I wanted to get back into this position, I'm still buying this 345 call. Just saying. So that's how I broke down PayPal as far as buying the option contract, seeing the volatility, seeing that it was low, seeing the volume, seeing that it was higher than the open interest, and then identifying where support and resistance lines were. Once it was able to do all of that, then we were able to find a better way of getting in, and then a better way of getting out. So we're not holding near resistance. If we're holding near resistance and it's overbought, like it is on the 4-hour time frame and on the hour time frame, more than likely it could pull back once the market opens. And maybe it goes higher during the pre-market on Monday, but at some point or another, it has to pull back because it's overbought. That's just how it goes. It was overbought here, it pulled back. Overbought here, pulled back. This is the hour time frame still. Overbought here, pulled back. Overbought here, pulled back. Right? It's going to pull back no matter what. Anyone have any questions about PayPal? Let's look at Starbucks, because that, like I said, that was one. Since I'm in the inspection game when it comes to restaurants, these are the kind of companies that I like to look at. And as you can see with Starbucks, they have earnings coming out this week. They also ran up before earnings. I was wanting to buy on the 21st. I didn't buy when it was $119, and I kept on saying you need to buy this, but I can't buy. Well, not that I can't. I don't want to buy it from my phone. Once I'm not in front of a laptop where I can be able to see the whole chart without struggling by looking on my phone. I know some people can do it. Kudos to you. I can't do it. Every time I do it, I lose money. So I just remind myself to stay disciplined. So Starbucks was a great buy. It's overbought now. Maybe it goes up a little, and it created a new high. Maybe it goes up a little bit higher on Monday, but do anticipate some type of pullback, either when earnings is released or before, like the day before earnings is released, so that when earnings is released, it will go up higher. They give out dividends about 45 cents a share. So this also seems like a reasonable stock to hold, not just for now, but this is a long-term hold. We see that it also came off from phase 1 to phase 2. Resistance was there, came down. Well, resistance was there where it trades sideways. Phase 3, we can identify the past resistance back here, right? And even though it kind of did a miniature breakout kind of thing, it's still over here. We're still showing that there was resistance there, right? So resistance at 118, it hit 120, pulled back, right? So that's that ish part. Yeah, 118, 119 ish, pulled back. Phase 3, phase 4. This is a subtle phase 1. Now we're in a exponential phase 2. So expect a phase 3 to happen, so you can anticipate a phase 4 to happen, so that maybe you can just rebuy at 118. There's no reason to force this trade, but do know that Starbucks is going to go higher. Um, and then maybe earnings will tell us that this is a good buy, a good purchase to have. But right now, slightly overbought. Don't like it. Anytime it goes overbought, it always pulls back. And we can see overbought, pulls back. Overbought, pulls back. You know, maybe it gaps up higher. I'm just saying just level your risk reward. 119 is that supportive risk price. I would say be mindful of that price if you think about Starbucks, because that's a good supportive price. Does anyone have any other stocks that they want to look at? I know we're approaching 4:30, but there are plenty of other stocks that are coming out for earnings. Like I said, we have UPS and Apple on Tuesday. We look at Apple real quick. Let's see on Apple. Apple just made a new high. When Apple made their new high, they pulled back, right? This is what happens. Makes a new high, needs to pull back. It pulls back. This goes back to your question, Leon. After it, what happens when stock starts trading below the 5 EMA, and then once it come to the 20 SMA price, that's what happened. It didn't come to the 200 price, but you're acknowledging that, hey, is it going to respect the 20 SMA price, which it did. So it didn't have to break through the 20 SMA price to reach the 200 SMA price. It respected the 20, it bounced off of there, and it's now at resistance, its previous 150 price. I expect Apple to go higher. I expect it to break out, just like Qualcomm. I expect Qualcomm to do the same because they're both in the semiconductor space. Even better with Qualcomm is that it trades with the 200 SMA price. Hasn't even made a major breakout yet, and it wants to break out above this 144 price. Earnings comes out, that'll be a great reason for why Qualcomm will have higher upside. If it has a higher upside, just know that its previous high is 167. You can measure what your risk level is by identifying what phase it's on. It's on phase 1, and the moving averages are coalescing with each other. Once the moving averages come together, it should go higher. It should spike, and it's near breakout levels, right? And when we're looking for technical breakouts, we're looking for either a strong green candlestick engulfing the previous candlestick, or a strong green candlestick slightly below a strong red candlestick. Because if it's slightly below, that gives us room to have more buyers to buy off what that previous red candlestick was. If that happens, right, and it still meets resistance, just like make sure that you identify that resistance right here. It's at 144-ish. You identify that resistance, because if it doesn't go higher, let's say it goes to like 149, right? It could do something like this, where it'll go to 145, maybe 146, but pull back, right? And then it'll still show you a green candlestick, but now it's an indecision green candlestick. And because it becomes indecision, then it has a potential of pulling back. And that's exactly what happened here. So just be mindful that even though it's engulfing the previous red candlestick, we expect it to go higher, but always anticipate downside risk. Always, always, always. Risk, reward level. The reward level here, we're anticipating the previous high at 167, right? I think that's 167. We anticipate reward 167. That's $23 of upside. Your risk, you should really only risk where the 20 SMA price is, which is $3 of downside, which is 141, right? So where it's trading now versus where it can trade to, this is very good, right? That not only is it holding the 200 SMA price, let's even go further, right? We could say $4 of downside risk. The 200 SMA price is at $140. The previous high is 167. $4 of downside risk versus $23 of upside reward. That is the risk reward that we want. And everything is going in its favor, right? We have that there's a change in momentum. The TTM squeeze histogram is turning teal, so that, and it's getting bigger than the royal blue color that it just came from. It's holding support, right? It tested resistance, broke resistance, so it wants to kind of go higher. So it's doing, and it came off of phase 4, holding phase 1, and is entering phase 2 before earnings. These are positive things, not overbought. All of these are positive things that are lining up. So if Apple comes out with positive earnings, best believe Qualcomm is going to have something positive to go with it, because this is a semiconductor space. So semiconductors tend to do this. Semiconductors tend to influence other technologically driven companies, especially if it's technologically driven companies that have more than one service. Apple has more than one service. So, well, we see that the car space has, like, GM, Ford, they're all entering in this technological advancement when it comes to automobiles, but they're also just one service, just cars, right? Yeah, they might have, like OnStar or something like that, where you can be able to reach out to an operator just in case an emergency happens. But at the end of the day, it's just one thing. Apple has many services behind it, right? So as much as I don't like Apple, right, to use, I do know the value it has in society. So with that being said, Qualcomm should actually feed into Apple. So we did Apple. Well, we kind of did Apple. We kind of did Qualcomm, but we definitely went into Tesla. We definitely went into PayPal. We definitely went into Johnson Johnson, and I feel like we did one other one that I just don't remember off the top of my head. Not Facebook. Not what's another good one for the upcoming earnings that we should like tap into. Maybe Amazon. No, we already know Amazon's gonna go higher. I don't even want to even touch that, because we just know. It's just no. We did Starbucks. That's what it was. We did Starbucks. Trying to think. What's another one that's coming out with earnings? Let's, going into Monday. Checkpoint. I think Checkpoint CHPT. Where's Checkpoint? Or is CKPT? Yep. Checkpoint Therapeutics. Nope. I'm not sure. I don't know that one too well, so I can't even speak on it. And I hate speaking on things I don't know. But let me look up the ticker symbol real quick, because I'm not sure what Checkpoint is. It might be CHPT. Check. See. Checkpoint. Yeah, CKPT. Okay, CKPT is. CKPT. This is Checkpoint. They're coming out with earnings. They're only trading $2 a share. That's even more interesting. Checkpoint Therapeutics. Okay, whatever. So Checkpoint Therapeutics is trading $2 a share. It's coming out pre-market on Monday morning. It has been in the phase 2 forever. I would not even touch this. Like, I wouldn't even come. I couldn't even bear to come to touch this, right? Just because of how much downtrending. When we think of stocks that have avoidable charts, this is one that's avoidable. Like, you just say all your life, you barely traded more than $2 or $3 a share, and you have to like wait for the most opportunistic time, right, for this to happen. So $4.83 was a high or resistance. Okay. It tends to trade how much volume? Like 600,000, 400,000. and it needs some type of catalyst. I would avoid this. This is just, pre-market, but I don't know much about its background as far as like what they do as a company. But I do know that they're coming out pre-market. So if you wanted to look at it and see what it actually does, then, what it does as far as movement, then I guess you're okay with that. But at the end of the day, Checkpoint Therapeutics, I'm not even looking at that. Like I don't like his chart. His chart sucks. That's a chart that you avoid. This is CKPT. You don't even look at that chart. You just move along. Um, Maybe you were shorted, right? Maybe you bet against the stock, but apparently, as I'm trying to look at what it actually does, they treat patients for solid tumor cancers. Um, the chart sucks. If you want to see a sucky looking chart, you look at CKPT. It sucks. It just doesn't do anything. So that's neither here nor there now. Um, so does anyone have any questions? I know that we went through quite a couple of stocks that are coming up with earnings. If you're on Instagram, you're watching and you're not able to watch on Zoom, if you have any questions, definitely continue to put it into the chat box and I can address them. But once again, yeah, we looked at quite a couple of companies that are coming out with earnings, and then we fully analyzed Tesla. We went through back ways forward how to analyze, where downside is, where upside is. We're looking at all these things, right? So you apply that same knowledge because all of these stocks do the same thing. They just look different. We're all humans, right? We'll all look the same, give or take a couple of things, right? Our genetics are pretty much the same. We look at ourselves from a DNA level, you know. But at the end of the day, we just express differently. But we still do the same things. We still talk. We still eat. We still breathe. We still walk. We still, communicate with friends, family. We still have the, interdependent relationships among each other. This is the same way the stock market moves. It has the same type of relationships. They're not independent of each other. They're very dependent of each other. Case in point, Qualcomm and Apple, right? Semiconductors. Case in point, food shortages that might be happening with Chipotle. And if they're acknowledging that there's food shortages and they have to increase prices, just know that will trickle down to possibly your KFC or stocks that are part of the food industry. Maybe even Starbucks, it might trickle down, even though Starbucks doesn't really sell food like that. Maybe to Taco Bell, to Popeyes, things of that nature. I keep on mentioning food, and I'm thinking of chicken and French fries. I'm probably hungry now. So with that being said, just remember that this stock market is a living, breathing organism that does have rules, but you have to be diligent in standing by your rules so that you can continue to profit. So Monday, I would definitely say look at Tesla, see if it holds those price points. If it finds that resistance at $654 before coming down to $630. Look at that on Monday. It doesn't say that you have to trade it or buy it, but look at it. Maybe you look at Apple and see if it does break out to a new high, as we're approaching schools, opening up and people needing new laptops for a new year. Do I want to buy a new device, an Apple device? That'll be something to look at. Are people actually doing that? Maybe it breaks above 150 and you say, you know what, I want to buy this share price around 147 before it does go up to a new high. Look at Starbucks, see if it holds the price levels that we mentioned as well. Look at PayPal, digital payments. I was saying it all week, digital payments, right? But I wasn't mentioning PayPal specifically just because I didn't want to throw people through a loop. I just want them to think about it. Some people did say Square PayPal, and that was good. So people understood that, maybe getting into a Square or PayPal might be good for their portfolio to hold. These are longer term holds or, day trades. Maybe on Thursday, Gilead, Merck, AstraZeneca, they might say something about, vaccines that would influence the market. Maybe ExxonMobil on Friday will say something that will affect the energy space with oil, right? Maybe everything in energy might come down because of what the FOMC might say on Wednesday. So really start layering, your thought process around how the stock market moves based on what you want to buy or sell, and then it becomes a lot easier, right? So, does anyone have any questions on Zoom? Questions. Do not be afraid to ask questions. Anybody have any questions on Instagram? You know. All right. So it's approaching 4:45. Once again, everyone on Zoom, I know that you were probably using Thinkorswim. There are other trading platforms that you can use. Uh, Remember that there's E-Trade. E-Trade is really is good if you're using E-Trade Pro. Anything else sucks. Robinhood is good to use if you, especially if you have the card. I have the Robinhood card that I tend to use to make purchases. So I like them a lot for that purpose, but the chart sucks. So using Thinkorswim is really, really good to use in supplement of that. And then also, if you are interested in any other trading platform, I would say Interactive Brokers. They're really good because you get to really see more of the insider buying, like Black Box. Black Box Stocks, that's another platform that you can see, insider buying on when it comes to like options and stuff like that. The only thing with Interactive Brokers is that you need a $10,000 minimum. I'm not pressed to use it. I have that minimum, but I don't care to use it if I know that everything that I can get is free off of Thinkorswim. So those are like the best platforms I would say, or the most used platforms I would say that you can dabble into if you wish, but definitely become more and more familiar with your platform. Then it'll be easier and easier for you to gain profit because you're familiar with not only buying and selling, but moving things. Also, was it Cash App? I've started using Cash App just a little bit more, and I like using it. You can only buy shares in stocks. I bought shares in FLGT, which is a genetic company. Even Kathy Woods is invested in it. I think anything above $80 is a good purchase. It's, right now, it's trading around $89. Um, so I sold it on Friday. I took my profits, and now I'm looking to get back in just because I like to jump back in. So I know we went through a whole lot of stocks. If you have any questions, please feel free to hit me up in the group chat. Other than that, we're going to come back next Sunday. Talk about how much we earned, how the next vacation that or donation. I tend to donate a lot of my profits quite often. So if you are thinking about donating to a charitable cause that's looking for the better society, United Way is always a good one. The National Urban League, that's one that I often donate to. So definitely start thinking about where you want to send your profits and what you want to do with them after this upcoming week. Yes, thank you as well. I greatly appreciate you. So Leon, Sophia's daughter, everyone who comes in on the chat, even was it Angie? I know she stepped in and then she stepped out. So these little things, if you ever have any questions, feel free, hit me up on DM if you're on Instagram, and if you are even interested in Pinterest, keep an eye on Pinterest coming up for this upcoming week. And I'll see you next Sunday, 3 p.m. to 4:30. We'll be going over these stocks. I know I ran over 15 minutes. It's okay. I started 5 minutes a little bit later. So I just wanted to give you a little bit extra. So thank you so much. And I will see you all next week. Y'all are awesome. Thank you. Thank you. Thank you. Thank you.